The following is a presentation of TFNN. The Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
Alrighty, folks, welcome back here to the Diagnostic Trading Hour. And I'm your host, Darrell Martin, right here on TFNN, TFNN.com. Coming to you live on your mobile phone at TFNN.mobi. And live inside the eSignal platform. And, of course, Tiger TV at TFNN.com. Like I said, let's check out where the markets are currently trading at right now. And pull up my market watch report. And let's see here. Trying to get the updates. And Thinkorswim's not giving them to me. They're having a connection issue. Okay, well, that's going to make it a little difficult to give you your market watch report for the minute. Let me log back in and see if they fixed their network issue so I can give you an update on where everything is currently standing. Going in and looking at this one more time. Sorry about that. That's a way to start off the show. Come on, TOS. You can do it. Several things just having their things today. Okay. There we go. All right. Logging in. Desktop launching. We got it going on. All right. So we'll get on over here. Let's see here. We got gold is sliding on down. Let's go ahead and hop into those while all this is updating and getting going. Gold sliding on down. Firmer dollar equity rally. So gold is getting more and more pressure as, of course, people think that there's a higher and higher probability that they'll increase interest rates, making the dollar stronger, making other things cheaper. So at the same time, the data that comes out supports a delay in the Fed rate. So, it's interesting. It's always a mixed bag, and that's why you can't exactly trade the news as is, because if you do, what happens? All right? You're going to be severely disappointed. You have to follow the charts. Be aware of the news, okay? Be aware of the average moves on the news. Use that knowledge to your favor. Know when the bus is coming so you don't get hit by it when you cross the street, but don't simply trade based on the news that comes out. That can be very dangerous. People say don't trade into a number. I don't trade into numbers unless I have the stats on those numbers of how far those numbers move the market. And I look for an 80% stat or higher for consistency. So whenever you hear me calling out all our ways to trade the news, that is based on looking at the stats of 80% of the last year and last 5 years, both. So I like to see short-term and long-term both line up. And let's see here. I'm going to go over here. I'm going to log back in. And let me see if it lets me do it. There it goes. Okay. So we'll go into our news trades here in just a little bit. Wednesday shows is usually focused on the news. We got a crude plunging on down. Bigger than expected inventory buildup and production surge. It just keeps going and going and going. Biggest surge in 5 months, and we've been way above. Let's look at this report because it's sort of becoming just a mantra now. But I want to show you the important line in this news report that does not seem to go away lately. And that's right over here. Let's see here. U.S. commercial crude oil inventories rose by 3.1 million barrels from the previous week. 461 million barrels. The U.S. crude oil inventory remains near levels not seen this time of year for the last 80 years. That's what we're hearing over and over and over. Gasoline inventories are also up. And they are way above the upper limit of the average range for this time of year. So, anyways, but just be aware of that. That's going up. That's, I'm seeing gas around $1.60, $1.70, $1.80. And I'm thinking, man, if this keeps going, it's going to be like when I was back in high school and it was less than $1. So I know that some of y'all that sounds expensive too. Some of y'all that sounds cheap too. I remember $20 filled up the tank. So it may not be that long. Maybe my kids can remember that also. But anyways, crude oil inventories, 3.1 million, just continue to production going up still, and we're still building inventory through this massive decline on oil inventory prices, or inventories, causing a decline in oil inventory itself. So if I go on over here, we can look at oil inventory, where it's at right now. And, we're just seeing some pretty massive drops. It's down and hitting down 47.80 today and this morning. And so we had a nice big move on the oil inventory report. I was on a webinar with another trader earlier today, and they traded that, and they did well. They did a strangle over on Nadex, Cam White there. And I'm doing a great job on that trade. Let's see, European shares. They extended the rally driven by commodity stocks. So going on up, Pan-European FTSE up 1%. Mining and energy shares top gainers. So, which is sort of interesting that mining, I understand the energy, but the mining is up despite the prices being down. Airlines down on stronger crude oil prices. I wouldn't quite buy into that one overall with the drop in crude that we've had. So if they've been buying any kind of futures at all, they ought to be pretty well hedged. So probably not the best news line, but somebody decided to throw that in there. And then, so U.S. dollar comes under fresh pressure. It's really funny how you read these reports. One of them says the dollar is rallying. One of them says pressure, but say, hey, it's losing ground against the euro, the yen, the pound. So, yeah, not so much. We'll see what happens as things, keep moving. But cable is rallying. Fresh highs there, 53.21. And so moving on up, but we'll see what happens. It's all about that interest rate. So if they raise that interest rate, that makes it worth more. If they don't, then it keeps going. But let's see. I'm trying to see if I can get there we go. All right. So right now we got the equities and checking them out right now. They are in positive territory. And let me move off of this. It'll be a little difficult to read for you. I know that's too small of a type font. So we'll move off of that one. Get back over here. I'll just show you the Forex news page. But just to give you that daily market update over here. All right. The S&P is up, up 6 points right now. The Russell is up 8. The Dow is up 49 points. Nasdaq currently down 3 points on the day, so it's in the negative territory. And then going on over here to gold. Gold is currently down 20 cents on the day. We got copper is pretty flat on the day at the moment. It's up 0.01, but basically flat. And silver is up 0.016 on the day right now, so really not moving that much. We got oil is currently up 15 cents on settlement, but after that big decline, so it's rallying on back up. Natural gas is in positive territory, up 0.023. We got corn and soybeans giving us a max mixed bag there, with corn down mere 3 points and soybeans up 3. Going on into bonds. Bonds are in negative territory right now, down 0.12. And we got dollar index rallying up against all the other currencies despite certain news releases, up 12.012 right now. Euro dollar is down 24 pips on the day. Euro yen is down 64, and euro pound is down 53. Pound dollar currently up 93 pips. Pound yen up 64, and the dollar yen is down 29. Aussie yen's up 31. Aussie dollar's up 45. Dollar Frankie is up 38, and the dollar CAD is up 5. We'll get on over. That covers all of your current markets for our market watch on the day. And like I said, NASDAQ was sort of lagging with the other contracts over here. And I don't know why this is fell into wood. I may have to adjust that one here in just a moment. But we're going to go through, we're going to do our news watch. And let me see if I can close this down, restart that, and then we'll get a fresh new one up. And while we're doing that, like I said, let's go ahead and pull up the news on the day. And with that, we can get ready for the next week of what news is coming up. Again, if you trade the news or don't trade the news, you need to know about the news because it will impact the markets. So let's look at the next week. Have it on your radar. Even if you're not trading it, you want to know about it. Okay, just because it can impact your charts. So tonight we got yen has some various reports coming out. So you want to make sure you are aware of those and how they can impact you. So 750 to 850 current account and core machinery orders, not major ones that give you a consistent outcome. Okay. So, not ones that we're necessarily looking to do a specific news trade on, but if you are trading the yen tonight, just be aware that there could be a little bit of a pop right there off of that announcement. Going in tomorrow morning, we do have an important one on the pound for any of you pound dollar traders out there. And that'll be the pound official bank rate and asset purchase facility. So their rate statement. We would bring that on up. And that'll be coming out at 7 o'clock. We look at an entry. Now, understand, I like this more when we have certain announcements. I want to see if we're going to have them tomorrow. Let me check, because I know they have a monetary statement coming out. Yeah, they said the monetary policy accounts. Okay. This trade is my favorite trade, one of my favorite trades to do each month, when the euro follows it, the euro interest rate. It doesn't follow it this week, so just use caution with that. Probably will stay and do exactly the same thing it does every time. It's just really flat, but still really inflated on premium. So it's like this cool combination of inflated premium and flat market whenever the pound and the euro come out back to back. Tomorrow, it's just going to be the pound official bank rate, monetary policy, asset purchase facility, and MPC rate statement news. No change is expected. That release will come out at 7. The trade that I look for is a 6 a.m. entry. I get them at 6 o'clock. And I look for an 8 a.m. expiration. And I'm trading Nadex spreads. Okay, and this is a premium collection trade. It's not a directional trade. And it's where I buy the spread that has the ceiling and floor below the market, and I sell the spread of the ceiling and that has the floor and the ceiling above the market. So I buy the lower spread, I sell the upper spread, not the middle spread, but the lower spread I buy, the upper spread I sell. And they have 3 spreads that'll be listed for 6 to 8. I want that upper one, I'm going to sell it. I want that lower one, I'm going to buy it. And I expect it to stay in between the price range. I look at the max profit on both sides, okay? Again, I look at the max profit on both sides, and I want that to be at least a minimum profit of $30. I'll show you an example of a premium iron condor when we get back. Stay right there.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Alrighty, folks, welcome back here to the Diagnostic Trading Hour. We're going through the trades for the upcoming week and seeing what we got. Okay, so we got this Iron Condor, and I said I was going to show you just an example of one when we got back. So let's look at an example of one. Okay. Let me close out that, and that, and that, and that. Okay, and then let me grab over the scanner. And what I'm going to do is, I just want to make sure that when I'm saying, hey, buy the lower spread, sell the upper spread, make sure the maximum profit is a minimum of this much, you know what I mean. So I'm going to go over here to the scanner. I'm going to pull up spreads. And inside the scanner, let's just look at one that I know that usually has some. Let's go and look at the NASDAQ. So we'll pull up US Tech. And we'll zoom in a little bit, make it easier for you to read. And I'm going to say, I want there to be some positive premium. So at least $1. Okay? That's going to get rid of all of the negative premium spreads. And I want ones that, on both sides here. So we're going to choose the ones that expire here. Well, I guess it's going to be intraday and daily. Let's see here. Let's go back to all time period, but let's say a minimum time. And we're just going to say at this moment, we're just going to go and we're just going to say a couple hours. Pardon me. All right. So now all I see are positive premium spreads. And I see one on the right side. There's only one on the right side, period, that I can do this on. And it has 42.40 up to 42.80. I'd really like to see a 42.40 ceiling. So now I'm going to go to my defaults for a second, and I just want to see. Let's get rid of euro dollar. And 42.40, 42.80. That's going to be a middle spread. Oh, there we go. We got a 42.40, 40. That's not going to help me. Okay. So, all right. So looking at this contract right here, what do we got that we can do? And this could make 106. So we can lose a few hundred. What if we? I'm gonna try to come up with a fun trade for you. We're at 42.80 right now, right? All right, so right there, if we go in, and this is going to be, I'm getting off topic. We'll come back to that, but that looks like a really fun trade to talk about. So we may come back to that in a second. All right, 4,300. Let's just see if we can find an iron condor. The problem is the market's moved so much on that. I know, let's see, oil was close back. Let's see if we can find any positive premiums. What about the Wall Street 30? It's got a little bit, not real impressed. S&P. 1920, 1960. And let's look at that one. Okay, this works. It's not necessarily ideal for what I'm looking for, but it does at least exhibit the idea. Okay. And we'll say, again, we want a couple hours, and we're going to say we want like a minimum of $1 in premium. So that sort of shortens down what we're looking at. Okay. Ideally, this is when you hop in these trades, like you're hopping in right at the top of the hour, like 6 o'clock. Okay. So they'll be lined up a lot better than what we're looking at right now. But what you can see is the floor of this spread. Okay, sorry. The floor of this spread that I'm selling this spread. Notice how it makes money. Here's the profit and loss. Okay. It makes money when the market, here's the market price at the bottom, goes down. Okay. I'm selling it. I'm selling it higher than the market is. The market's at 1969, selling it at 1971, basically. Okay. So there's about $10 of premium in the trade. So that's not really that bad at all. And this one's positive premium. Market's actually above the ceiling, but notice that the ceiling of the spread, 1960, is the same as the floor of this spread, 1960. So the ceiling and the floor match. I'm buying the lower spread, selling the upper spread. I'm not doing this trade, but this is an iron condor setup. We'll talk about it again in a minute, then we'll go back to that interesting trade here in a second. Stay right there. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. And so again, just talking about what is an iron condor on Nadex. It's buying the lower spread where you make money if the market goes up. It'll have a high risk and low reward, okay? And then selling the upper spread, okay? So this spread has a maximum profit, I mean a decent maximum profit, where it can actually make quite a bit overall based on market movement. And let's see here. If it was in the middle, it'd be a great spread. But it's not. Again, we hop in, and then these trades I call out, I say, like, enter at 8. That's because you want that market. This line right here is the current market. Like, that's the S&P right now. You want it to be in the center. And then what you'll do is you'll add up the premiums. So there's $8, and there's $5, $13. You'll add those two premiums, the max profits on the trades as well. So, and if the market's in the center of them, which means that you have the same ceiling on the bought spread as floor on the sold spread, okay? If those match up and you got positive premium on both sides, the market's right there near the floor and ceiling, you add up those two max profits, the minimum should be the amount I'm reading off to you, okay? So the minimum on this trade, for instance, should be $30, okay? Let's see here what else we can find. So I'm trying to put together. All right. And I got that almost done. Just trying to see if we can pull up another one of those interesting trades that was right before the break there. And if we can, then we'll be set to get started. Okay, yeah, there we go. I think I just found one. Okay, again, yeah, over on now.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Catch Steve Rhodes.
Alrighty, folks, going back here to the Diagnostic Trading Hour. So, internet connectivity going on there, but we're back and in full throttle. And I was going over iron condors. We were checking out some potential setups of trades that you could do if we were looking at an iron condor. And we sort of wrapped that up. And I was going over, I was just looking at some trades, and I was wondering, I was like, well, what if you did this, or what if you did that? Is there any way that we could potentially profit from these? And so let me reset everything, go back to just the NASDAQ, and let's just look at the ones that expire here at the end of the day for fun. Okay? So we're going to go down here and look at, end of day expirations. There we go. Just basically, I just looked at how much time is there left till expiration and chose the least amount of time I could and filter down just to the end of day. And what I was looking at, and I mean, just for fun, like I said, is to go in here and go, okay, what if I bought that contract? I mean, it's got $76 in premium, okay? And it's a 42.40 to 42.80. And we have the market right now is at 42.90 or so. And what if I sold that contract? Well, why would I do that? Well, I can buy this one for 42.72. I can sell this one for 42.87. There's a difference of how much? 15 points right there. 15 points of profit between the price I buy at and the price I sell at. Okay? Now, if the market goes down, I got $470 of profit potential. That more than covers the maximum loss here of $318 of max risk. And I still get to lock in my 10 points, 15 points almost difference, $150 of premium on the trade. What if it flies up? Well, this one can make up to $83 higher, okay? And 83 would be 8.3 points higher than where I bought this one, okay? 42.86. So up to about 42. Oh, what do we get? 90. Let's see. I can't think right now. 42.94. So that hedge me up to about 42.94. Not a massive hedge on the upside. But if you're looking at a short trade, you want to lock in Supreme, you're neutral to bearish, then that could be, the perfect setup for you. Okay? And I know it's sort of a weird trade because the market's hanging out up here, but that means that all this premium, this bot contract, where we're buying way down here at 42.71, we get to keep it. All right? So just for fun, let's put on one of these. And I want to, like I said, walk you through it. And if I'm still connected, we'll see right there. All right, so we got that one on. And then we go here and we sell this lower one. Okay? And I want you to look at, we bought at 42.71, we sold at 42.85. That should be a good thing registering in your head. Buying at 42.71, selling at 42.85. It's about, 14 or so points, $140 in profit on the trade, profit potential on the trade. If it goes down, we don't have any risk. Okay, so if the market drops, we have no risk on the trade because it can make a lot of money on the way down, and it will more than cover. Since we sold at 42.85, it'll make money all the way down to 42.40. We bought this one at 42.71. It'll lose money down to 42.40. Well, that means we'll make more from 42.85 to 42.40 than we lose from 42.71 down to 42.40. So we have nothing to risk on the downside of the trade. If it stays relatively flat, not a big deal because we'll actually profit. We got 14 points of profit sitting in here right now. Okay? So again, 14 points of profit are sitting in the trade, or 14, yeah, so that's $140 of profit. And for us to lose on the trade, we'd have to take that difference of 14 or $140 there, and it'd have to actually expire that far above. You'd have to expire that far above. We got a screen popping up in front. The price we sold at. So, because we have a maximum profit on this bot contract over here. Let's pull that up. Of how much? $89. So at least $89 of profit that could cover a loss from 84 up 9 points. So that put us up, let's see, we're at 42.83 right now. 84, somewhere around there, 83. Oh, let's say 83, make it simple. And we bought at 42.71, so that gives us a lot of profit, at least 8 points of profit. So that would put us up to, really higher than the ceiling goes. But the 8 points of profit would put us at 42.94. So if it expires at 42.94 or less, we will make money on the trade. If it stays flat, we can make $140 on the trade. If it flies down, we'll still make $140 on the trade. So it's a very neutral trade with a downside bias and a upside risk of the market having to move up 9 points as of expiration for us to lose on the trade. If we know we have $150, again, we know because we bought at 42.71, we sold at 42.85. Okay? If we know we have $150 and we know our break even is pretty much at 42.94 on the trade, we can hop over here and we can look at the binary scanner. Okay. Look at the binary scanner here, and we can look at the end of day expiration. So let's, again, it's hour and a half minimum to expiration. I get sort of all the intraday ones, and we can go down to 42.96. Not really the risk reward I'm wanting right now. It's $39, but like I said, very simple trade. I can go in and I could put in. I could take $150 of that profit I wanted to. I could spend like say $20, and as the market oscillates a little bit, I could get say an $80 hedge. So it'd give me another 8 points and move me up from 42.94 up to like 43.02. Okay, so if I want to buy a little bit of a hedge, I could, or I could just say, hey, I'm going to write it out. Either way, I know I'm not going to get filled right now for $20, but I could let the order sit there. If it does sit there, that means the market's going in my favor. It's going down. But again, if the market stays flat, we profit on this trade. So very, how do I put this? I want to say no, but I mean very low anxiety trade. It's like, I think it's going down. And the reason I want to bring this trade up is people go, man, I trade these spreads, but unless it moves a lot, I don't make anything. Well, I'm showing you how to make money if it goes in your direction, how to make money if it goes against you, and how to make money if it stays flat. Okay, it doesn't have to move a whole lot in your favor to be profitable on the trade. Okay, it doesn't have to move at all, in fact, to be profitable on the trade. So, I mean, if it expired at 42.86 right now, one of them would basically be break even, and the other one would make 15 points. So, not a bad deal at all. I guess it'd make 8 points because it makes money up to 42.80. So it'd make $80. And that's pretty low stress trade. And I like low stress trades. Remember, we got up to 42.94. If it starts moving up and I want to hop out, I can. But notice, we're not moving around by massive amounts. It's not going to be $50 or $80 all or nothing loss like on a binary contract. And don't get me wrong. I like binaries. Okay. I do well on them. Made a couple grand today trading them. Okay. So, I like them. But it took me a long time to get used to them. They're very statistically based contracts. Anyways, that's all we got time for today. Fast show. But hope you have a great day. And do make sure to, hedge off or exit your trade if it does go too far against you, okay? If you are following along on this or demo trading. You have a great day. I'll talk to you next time on the Diagnostic Trading Hour.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.